Today we wanted to talk about how much money you're pocketing for selling your house to buy a new one.
And it's not always a straightforward answer of subtracting your mortgage from the sales price. You have to really kind of do a little bit more detailed analysis and understand your net proceeds, so you can make decisions on if you want to do this home transition or not, or how much you're going to put towards this home transition. So that's what we're going to talk about today. So we're really going to talk about your equity.
Exactly. Therefore, what is important first is about the home equity.
Right.
No? Therefore, the portion of property that you really truly own and is free to clear to use from any kind of mortgage that says is home equity.
Right, so we're going to talk about how you calculate it. Now, to calculate, we're going to look at the current market value of your home. Again, you're going to go with BPO, a broker's price. You're going to use an appraisal, see recently home, and then we're going to subtract your mortgage balance. This is what we think of when we first. And support mortgage balance, any liens. So hypothetically, say your home is worth $500,000, your balance is $250,000. Your home equity will be $500 minus $250, which will be $250,000. Now, before we get into doing the next part, which is a little bit more calculations, we're going to do our introduction.
Let's hit it.
Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below. Now, talk to me about the other things.
Exactly. Therefore, after that, we wanted to talk really about the net proceed from the sale, which is amount of the money that really you walk away after all expenses related to your property from sale of your property had paid. And the key cost to really consider is these basically items. The number one is what?
It's going to be your real estate commission. Yes, we know August 17th is looming and sellers think they don't have to pay for buyer's agent. But if you want to sell your home, it is still a conversation to have. And I would recommend calculating upfront. Be honest with yourselves, because when you can understand upfront before we get to it and have a real conversation with your agent to really kind of mitigate what this might be as well, and be honest and straightforward, because that will be something to consider as well. Not, we'll get to it when we get to it, because now you want to calculate for your own numbers what it is. So typically it was in the market 5 to 6%. Again, the future is unknown, but I'm telling you to, calculate it in your proceeds when you're doing your math.
Exactly, which is going to be part with the buyer agent and seller agent. The next thing is the closing costs.
Maybe not with the buyer agent and seller's agent. Maybe not, but calculate it to do the math.
Exactly. The next thing that we wanted to talk about is closing costs. This might be different items that we wanted to talk. First, we're going to talk about title insurance, attorney's fee. It depends on your state. In the state of North Carolina, we have attorneys for closing. You might have a closing agent in other state. Then is going to be escrow fees, notary fees, and transfer taxes, which usually these might cost you 1 to 3% of the sales price.
Typically in our area, it's going to be about 1. But, it depends. Now, the other thing to consider is, of course, home repairs. If your home is not selling, the question is why. And if there are major home repairs that need to be done, we have to really consider it. If the kitchen is 1955 and it is 2024 at the filming of this video, you might think, well, what kind of home upgrades does it need for people to actually buy this home? So we want to make sure that the home is getting the best value, and you want to make sure that the necessary work is being done so people will buy the home.
Exactly. The next one, which is questionable, is the seller concession. Sometimes also you as a seller might agree to cover some of the buyer's closing costs as an incentive for selling your house. But it depends on the market that you are in, buyer's market, seller's market, and also for the situation of the home that you are selling.
Now, in the state of North Carolina, the next one does not count, but not everybody lives in the state of North Carolina watching, so we will mention it. North Carolina, if it is a primary residence, you will not have any prepayment penalties. If, however, you do buy a home or it's an investment property, you might have prepayment penalties. So you have to just look at your mortgage and understand what your actual costs are going to be to pay off that mortgage. So again, if it's your first time home buyer or it's your primary home in North Carolina, it is illegal to have prepayment penalties. That's why I said it's not really relevant to a lot of people, but it can be relative. So now we're going to talk about calculating. Let's do some math.
Exactly. Therefore, it's very simple. You just start with the sell price of your home that my wife said either market value or BPO, depending on if you're using a broker realtors or you're using appraisal to do that. And then you basically subtract all the costs that we just listed.
And again, this
before.
is for you to know, not necessarily the final number. This is just for you to calculate what's going on.
Exactly. Therefore, let's make an example. Let's say the sell price of your home is going to be $500,000 and you are paying real estate commission 5 to 6%, let's say 6%, that's going to be $30,000, and the closing cost of the sell price is going to be 2%. No?
Which is really high for our area, but we're just throwing it out there.
Exactly.
For math.
Which brings us $10,000. And then if you are repairing anything in your home or improving, let's say $5,000, and then if you give seller concession $3,000 and the mortgage pay of $300,000, how much you are?
So we're taking 500 minus 30 minus 10 minus 5 minus 3, which minus the 300 in this calculation would bring us to $152,000 that you are going to be there. That's not the only thing we need to consider. Now we need to talk about taxes.
Exactly. Therefore, capital gain tax also may apply to you if your profit exceed a certain threshold, like for $250,000 for single or $500,000 for a married couple. As when you are filing a joint, it's important to account also these financial assessments in how much money you walk away.
A lot of it is going to be how long you lived in that home too, like how much capital gains you have to know. But really, a financial assessment is going to help you budget for your next home purchase, understand your financial position when you are negotiating. And yes, we gave you numbers in every one of these examples. You do not have to pay some of these numbers at all. Like maybe the house is perfect and you don't need to do repairs, or the closing costs are much less. We used high numbers in all of this to avoid
Or you don't give
surprises.
any incentive to the home buyer, like a part of their closing costs or anything else.
So we're doing this so you are not surprised at closing on what the numbers are, so you can kind of plan your transition with numbers that are a little bit more in depth than you've thought about.
Exactly. And also I don't know if we mentioned also prorated property tax was in our items.
Yeah.
Okay.
That would have been in the closing costs.
Exactly. Therefore, now what we need to do
So
here.
basically, make sure when you're doing a financial assessment for your house, understand, be smart about it, be realistic about it, because you want to transition to your next home smooth. And by having conversations early with your spouse, with your loved ones, and with the real estate agents that you bring in that you trust, you can have a nice calculation so we can get to your next area where you want to be more and have that transition be smooth.
Exactly. Don't forget to call Alan Victoria, real estate agent professional in Pitt County, North Carolina, specifically Greenville and Winterville, North Carolina. We'd love to help you, and our number is 252-327-3357. Also, look at all these videos and playlists that we have for you. We'd love to connect with you, and see you next time.